What if I told you the vaults of Fort Knox might be empty, and no one can prove otherwise? That's not a movie plot. It's a real concern among the smartest investors on the planet. But here's the kicker. They're not panicking. They're buying gold. In this video, you'll discover why billionaires are ditching the dollar and grabbing gold. And I'll walk you step by step through how you can start investing in gold like the ultra-wealthy, no matter where you live or how much you earn. This strategy could protect your wealth in the next financial storm. Stay with me. There's an old story about a man who stumbled across a heavy chest buried deep in his grandfather's farm. Inside, gleaming, perfect bars of gold. Or so he thought. He never questioned it. He built a life around it, quit his job, took loans, showed it off, until one day he tried to cash in. Only then did he learn the bars weren't gold. They were gilded lead. The value? Practically nothing. His mistake wasn't getting scammed. It was never verifying the asset he was depending on. Now imagine this. What if the U.S. government is doing the same thing? Fort Knox hasn't had a full audit since 1953. No independent verification. Just blind trust. And yet, our economy, our currency, and global faith in the dollar all lean on the assumption that the gold is there. What if it's not? That's the question the smartest investors are quietly preparing for. Because if that trust cracks, gold becomes the last man standing. That story might sound like a fable, but look around. Global trust is already eroding. Currencies are being printed into oblivion. Inflation is cutting deeper each year. Central banks are stockpiling gold, and nobody's talking about it. If you've ever felt like the game is rigged, this video will show you how the smart money prepares, and how you can too. So if you want more straight-talking content like this that actually helps you build real wealth, hit that subscribe button and let's get into it. Let's kick things off with the first big clue, the Billionaire Signal. When billionaires start doing the same thing at the same time, quietly, it's never random. It's a signal, a powerful one. Over the past 18 months, some of the world's smartest investors have been steadily shifting out of paper wealth and into real assets. Gold is at the center of that move. We're talking about hedge fund titans like Ray Dalio, who's publicly stated gold is a crucial part of a resilient portfolio. Central banks in China, Russia, and Turkey are stockpiling it in record amounts. Even Elon Musk, who isn't buying gold but has warned repeatedly about fiat instability, is sounding alarms. The question is, why now? The warning lights are everywhere. U.S. debt is at historic highs. Global trust in the dollar is slipping. Inflation, once called transitory, is proving to be anything but. And interest rates? Still not enough to stop the silent erosion of your purchasing power. But billionaires aren't buying gold because they're scared. They're buying it because they understand what most people miss. When confidence in a system breaks, wealth doesn't vanish. It moves. And gold is often where it moves too. They know gold isn't hype. It's history. It's been a store of value for over 5,000 years, not because it pays dividends, but because it survives. And here's the most telling part. They're not advertising it. No billboards, no buzz, just quiet accumulation. Because gold doesn't work when everyone's watching. It works when almost no one is. So, while others chase noise, they're building defense. And if you're watching this video, it means you're early. You're paying attention before the headlines break. Coming up, we'll dive into Fort Knox, the most mysterious vault in American history, and why its secrets could rewrite the rules of global finance. Let's get real. There's a place in America more secure than the White House, more legendary than Wall Street itself. Fort Knox, the mythical vault, the fortress of gold. Or is it? Here's the part they don't talk about. No independent audit of Fort Knox has been done since 1953. That's over 70 years of secrecy. The last public tour in 1974 allowed a handful of reporters to see a tiny portion of the gold, under heavy control, without any verification of weight, quality, or even quantity. So ask yourself, why the silence? When something this important is shielded from public scrutiny, it creates the perfect storm for doubt. And in financial markets, doubt is deadly or wildly profitable, depending on which side you're on. The smartest investors? They're not waiting for a press release or a shocking expose. They're preparing now. Because here's the truth. Gold isn't just a metal, it's a mirror of trust. And when the world starts questioning that trust, especially in the currency that fuels the global economy, gold becomes the last lifeboat on a sinking ship. This is why they're grabbing gold while everyone else is glued to stock tickers and crypto bubbles. It's not panic, it's positioning. Coming up next, we'll explore why gold doesn't just survive crisis, it thrives in it. You'll see exactly how it has outperformed entire economies during moments of collapse. Because what if the gold isn't there isn't just a question, it's a wake-up call. Moving forward, let's talk about what happens when trust in paper money starts to crack, and why gold becomes the loudest voice in the room. Every fiat currency in history has eventually collapsed. From the Roman denarius to the German mark to more recent examples like Venezuela's bolivar. Not because people stopped using money, but because governments lost control of it. Today we're watching signs of erosion right in front of us. The U.S. national debt has crossed $34 trillion and rising. Inflation has eaten into savings and wages. Countries are forming alliances to trade outside the dollar. And central banks around the world are dumping U.S. treasuries while quietly increasing gold reserves. This isn't just noise, it's a shift. When paper loses value, gold doesn't panic, it performs. In 2008, while stock portfolios were melting down, gold climbed over 25%. In 2020, while uncertainty gripped the world, gold reached a record high. And now, in a world of global tension, high interest rates, and de-dollarization, it's happening again, but quietly. The smartest investors aren't waiting for the system to fail, they're simply reallocating before everyone else wakes up. Here's the thing. Gold doesn't rely on promises, it doesn't need headlines, and it doesn't default. It just sits, stores value, and waits for the world to remember why it's always mattered. And that's why we're here. Because why the smartest investors are ditching the dollar and grabbing gold isn't just a title, it's a strategy. Coming up, I'll walk you through the exact steps you can take to get started safely, strategically, and intelligently, just like the wealthy do. But before we dive in, if you're finding value in this video and want more deep dives into wealth-building strategies, drop the word "more" in the comments. That way, I know you're loving this content and want to see more like it. Now let me walk you through the exact method the wealthy quietly use to buy gold, safely, strategically, and with laser-sharp intelligence, so you can follow the same step-by-step playbook they don't want you to see. Let's be honest. Most people think buying gold means walking into a pawn shop or ordering some flashy coin online. That's not how the wealthy do it. If you want to follow what the smartest investors are doing, it starts with understanding how they buy gold and why. Step 1. They choose the right type. There are 3 main options: physical gold, ETFs, and gold mining stocks. The ultra-wealthy prefer physical gold for sovereignty and security. Coins like American Eagles or gold bars from Swiss mints, stored securely in private vaults, not in kitchen drawers. Step 2. They protect it. Most don't store gold at home. Instead, they use insured vault services in politically stable countries. Think Switzerland or Singapore. Some even diversify vault locations across continents. Step 3. They don't speculate. They hedge. Gold isn't for getting rich fast. It's a financial seatbelt. While stocks and real estate ride the highs and lows, gold quietly preserves. Most wealthy portfolios allocate 5% to 10% into gold, not more. It's about protection, not obsession. Step 4. They stay consistent. Instead of dumping in a lump sum, they use dollar-cost averaging, buying monthly or quarterly regardless of price swings. This smooths out volatility and removes emotion. Here's what matters. It's not about having $1 million. It's about having the mindset. You don't need to be rich to act like the rich. You just need a system and the discipline to follow it. And if you're watching from anywhere in the world, this applies to you too. Whether you're starting with $100 or $10,000, the strategy scales. All right, let's switch gears and talk about why central banks across the globe are doubling down on gold right now, and what that reveals about the next shift in global power. Let's zoom out for a second. Because if you really want to understand where the world is heading, watch what central banks are doing, not what they're saying. Right now, there's a silent but powerful movement happening behind the scenes. Countries like China, Russia, India, Brazil, and Turkey are aggressively buying gold, and they're not doing it for decoration. In 2022 and 2023 alone, central banks purchased more gold than at any point in the last 55 years. Think about that. These are the same institutions that issue currencies, manage inflation, and anchor economies. So when they start shifting away from the US dollar and toward physical gold, that's not noise, that's a signal. But what's the motive? De-dollarization. Many of these countries are preparing for a world where the US dollar is no longer the dominant global reserve currency. They're hedging against economic sanctions, political instability, and the erosion of trust in fiat systems. And they're doing it with gold, because gold isn't tied to politics, borders, or broken promises. And here's the real clue for you. These central banks aren't announcing their purchases. They're accumulating quietly, methodically, and consistently, just like billionaires. So, what does that tell us? It tells us that the smartest institutions on Earth are preparing for a monetary shift. They're not betting on gold. They're building a lifeboat. And if the people with the most financial power are moving their chips to gold, don't you think it's time to consider doing the same? Coming up next, we'll walk you through how to apply this same strategy in your own life, even if you're starting small. Because this isn't about watching the elite build wealth, it's about joining them. All right, now that we know what the smartest investors and central banks are doing, let's talk about what you can do, starting today. Because here's the truth, you don't need to be a millionaire to benefit from gold. What you need is clarity, consistency, and a simple strategy that works even with limited funds. First, decide your goal. Are you looking to hedge against inflation, build long-term security, protect against market crashes? Knowing your why will help guide your how. Second, choose your method. If you want something physical, start with small gold bars or coins from reputable dealers like AppMex or JM Bullion. For many beginners, starting with a fractional coin, like a 110 Oz American Eagle, makes it accessible and real. Prefer digital? Go with gold ETFs like GLD or IAU. These track the price of gold without needing a vault. They're easy to buy, easy to sell, and perfect for people who want liquidity. Then there's gold-backed apps like OneGold or Vaulted, which allow you to buy and store fractional gold directly through your phone, backed by real physical reserves. And finally, allocate wisely. Don't go all in. Even a 5–10% allocation in gold can give your portfolio much-needed protection and balance. Remember, this isn't about panic. It's about preparation. You're not trying to time a collapse. You're building resilience. Up next, we'll bring everything together and explain why this strategy isn't just about surviving. It's about thriving in a new financial reality. Let's bring it all together, because this isn't just a conversation about gold. It's about positioning yourself ahead of a financial transition that's already underway. Right now, the smartest investors in the world are quietly shifting out of dollars and into gold. Not because they hate the dollar, but because they understand where the tides are turning. Currency devaluation, record-breaking debt, and political uncertainty are no longer distant risks. They're part of today's headlines. And in a world where trust in paper money is eroding, the flight to hard assets isn't fear, it's foresight. This is why a growing number of central banks are buying gold, why billionaire hedge fund managers are increasing their allocations, and why average investors like you and me need to pay attention. The beauty of this strategy is that it works no matter your income level. Whether you're setting aside $50 a month or reallocating a portion of your portfolio, gold can serve as a silent anchor, steadily holding its value while the rest of the world shifts. This isn't a get-rich-quick tactic, it's a stay-rich-long strategy. And if you're still on the fence, just ask yourself, would you rather prepare now while the prices are stable, or react later when everyone's scrambling? And there you have it. Let's take a step back. We began this journey with a mystery. Gold bars locked in Fort Knox, unseen for decades. But this wasn't about vaults or conspiracies. It was about truth, about how the smartest investors, those who see through the noise, are quietly moving their chips off the dollar and into something more permanent, gold. We've all seen the signs, if we've been paying attention. The national debt is soaring past historic limits, like a runaway train with no brakes. The US dollar, once the untouchable king of currencies, is quietly losing its throne on the global stage. Meanwhile, behind closed doors, central banks around the world are buying gold, not with headlines, but with silence. And billionaires? They're not posting about it on Twitter, also known as X. They're moving quietly, diversifying into hard assets and letting everyone else stay distracted. This isn't random. This is a shift, a migration of wealth happening in plain sight, if you know where to look. These aren't headlines, they're signals, and now you know what they mean. So let's recap. In this video, we see why the smartest investors are ditching the dollar and grabbing gold. You've learned the why, the how, and the what now. You've seen how billionaires protect their wealth. You've seen how nations reposition for financial uncertainty. And most importantly, you've seen how you can start taking small, smart steps to do the same. Because here's the truth. Most people will watch this video and move on. But a few, those who are ready, will act. They'll study. They'll start. They'll prepare. And when the next financial storm hits, they won't panic. They'll be ready. Remember, this video is for educational purposes only and does not constitute investment advice. It is important to conduct thorough research and consult with financial professionals before making any investment decisions. The value of investments can fluctuate, and past performance is not indicative of future results. Always assess your risk tolerance and investment goals before allocating your capital. And if you found value today, I highly recommend watching my next video. Don't forget to like, share, and subscribe to our channel. Also, feel free to leave your comment below. I read everyone. I appreciate your support. Until next time, stay informed, stay prepared, and stay winning, Money Magician. See you in the next one.